Let me start by saying I haven't done a lot of preparatory analysis, so I'm going to be doing some studying right now, and that's okay. I think it's good to capture some of that. I think people like to watch it. I want to start today with the daily chart. You can see that, okay, that's a pretty big downtrend, and now this last week we've found a nice level of support here around $18. Is this the end of the downtrend? That's the million-dollar question at the moment, right? I want to look at something I don't typically pull up, and that's the Ichimoku cloud. The Ichimoku cloud is some sort of combination of different indicators, and it makes this cloud on your chart, and you can see this is big in red. So there are some strategies regarding how to interpret this information. So there's a conversion line, which is this blue line here. You see this, it follows the price more tightly, and you have this baseline, and this doesn't move as much. And when you have this conversion line cross over that baseline, as it does here, this is considered to be a bearish thing. Now, some strategies with the Ichimoku cloud suggest that you need 4 or 5 different things to occur to create a buy or a sell signal. And if I were to compare my trading with those strategies, I'm generally premature on my trades, which makes sense because I am, as I am now, holding puts, and they've been open since Wednesday. On Wednesday, I opened some puts, and I held them through Thursday too. So next week is really going to decide if I'm going to lose a bunch of money or make a bunch of money. And if you've been following my channel, you know I'm waiting for a vertical run down or a big dump in the price. Seeing the cloud in this sort of a position helps support that idea, but it really could be an opportunity for the price to reverse and move back up, probably to the top of the cloud around $21. So I think I'm going to keep that in mind, $21. That's where the cloud would suggest resistance to the upside. And I want to specifically look at the bottom line here. You can see that the cloud is hanging just over $17, and we did find a couple of bounces here with the low this week at $16.94. Is this bearish? Absolutely. If AMC were to drop below this cloud, that would be a sell signal. You would have the conversion line passing below the base, the price exiting the bottom side of the cloud, and out here the cloud is red. So those would be 3 different things pointing towards a sell signal. The only thing that might suggest a bounce may occur here is that the lagging indicator is now encountering the price. You can see it kind of touches the price and bounces. It's really interesting. I'm not sure how the Ichimoku cloud is created, but it certainly is a good addition to my technical analysis, and I think I want to start looking at it more. Oblong Japan in my Discord has been watching this, and I've been just kind of keeping an eye on it, and I think I like it. So this overall is bearish, but we don't quite have a bearish signal yet. But if we were to get a push outside of that cloud, it would be very, very, very bearish. And you can see the cloud, the last time we dumped out of the cloud like that was boom, right here. You had this big push, and then that vertical run down. And I'm waiting for something like this again. So that's what the Ichimoku cloud looks like. Bearish, not quite generating a sell signal yet, depending on your strategy, which I don't really trade on the cloud, but I am starting to watch it. What I like to watch very closely is the RSI. The RSI basically takes the average losses and the average gains within a certain period, and then comes out with this number. And I have in one of my other videos the equation. Nonetheless, when RSI is at 50, that basically means that the losses and the gains are equal, neutral, and that's kind of where we're sitting right now, right at 44, just bearish. So the bears still technically are in control here. You can see that the RSI did try to come up, and now it's kind of formed a double peak here at 46, which is pretty bearish. If the RSI were coming up out of oversold like this and was starting to move down like this, I would call that a swing failure, right? I would say the RSI, right, the momentum changed, it shifted, and this is an attempted bull run or a recovery bounce. And when you see this kind of this W in the RSI, it's a pretty good indicator. And when it happens right on 50 or at 70 or 30, it's very curious to how often it suggests or price trend change follows. So it's almost like we're seeing that kind of a failure, but right here, almost like there is support here, but that support is waning. That's how I'm interpreting that. You know, here's a big W, right? You're coming out of oversold, right? And here's one peak, valley, you know, peak, and it's right like near 50, isn't it? And then boom, the price drops lower, finds a new low. It wasn't all that much lower, but it was a new low. So maybe what we're looking at is something like this. You can see here that the RSI was moving up and then started to come down as if to make a further price plunge, but we had this W shape up in here, and that's almost like the downside failed there, and then we saw this tremendous push higher. And that's what I'm suggesting is probably happening here, just inverted and probably heading down lower. So this is what I'm seeing. I'm not seeing a big shift towards bullish momentum. I'm more seeing a pause in bearish momentum more than anything else. And the implied volatility has been dropping this whole time. I've been waiting for it to go up, but it's probably not going to be until the price exits the cloud. I bet you when the price exits the cloud and implied volatility starts to go up, then, you know, the premium on puts is going to increase drastically, right? And that would be very, very bearish. So it's probably all hanging on $17, whether or not Monday we see a bounce or if we see a dump, because either way, it's going to matter big. It's going to matter big. I would hate to see a bounce, obviously, because consolidation kills me. Consolidation kills me because my strategy is so risky trading near out of the money contracts. So I like to see implied volatility increase generally. We are in a downtrend with falling IV. So that's okay. It's a little hard to trade right now, but if we get that big dump, it's gonna be easy. So that's where I'm at with RSI and the Ichimoku cloud. I want to go out into the weekly because Obi-Wan brought this to my attention. Let me squish down the RSI here and pull up this chart. Here we go. Last week, a perfect doji form. This is actually a doji. With the close at 1802 and the open at 1803, a penny is within tolerance for a doji per Bulkowski. This is incredible. So we had this big drop, right? And then follow through, and boom, this looks like a potentially bullish reversal indicator, doesn't it? It really does. If this were flipped upside down, you would say, though, that the price was going to go down, right? So here we have it on the bottom. We'd say the price is going to go up. This is interesting. Obi-Wan brought it up. He looked it up on Bulkowski's website, and this is why I like Bulkowski. I'm going to go to candlesticks. I need his visual index. Here we go. Here's an abandoned baby, a bullish abandoned baby, right? This could be what occurs if we have a gap up. That's going to be a big signal, right? That would be interesting to see that. But that's not what Obi-Wan was talking about. We were talking about the Doji Star. Okay, he says, like its sister, the bearish Doji Star, the bullish version does not perform in reality as it's supposed to in theory. Whoa, okay, so that's super interesting. It doesn't perform like it's supposed to. So he says, the theory says that the bullish Doji Star is a bullish reversal, but my tests show that it acts as a bearish continuation pattern 64% of the time, and that's pretty good, or almost 2 out of every 3 trades. The 64% number is misleading though. Why? Because reversal or continuation is dependent on the breakout direction. A breakout occurs when price closes either above the top or below the bottom of the candlestick pattern. With a bullish Doji Star, price is almost at the low. So a small downward move would signal a continuation of the existing downtrend. That is much easier to achieve than is an upward breakout. And that's true. And that has to do lots to do with the volume. You can see that the price in AMC explodes when volume is really high, and when volume is low, it generally tends to fall, right? And that's what we're looking at in AMC. The big volume is on the big green, and then low volume, big red even, is on fairly low volume. Look at this. Last week's volume was terrible. When the price makes a wick or touches a level of resistance, like it did 3 weeks ago when it reached $34, an incredible amount of volume entered into the trading. And that's because a heavy level of resistance was found. And that's why I said with such confidence that this is a topping pattern. And boom, this thing it dumped. And look at the volume on the dump. It's very, very low. And that's because a lot of this volume is probably short interest. It's probably short selling. Like, that's how it works. So the buyers can push the price up, but there are levels of overhead resistance that are still strongly in play. And we haven't had a big upward test for a while, right? This is all downward testing. So we finally had this upward test and a rejection. And this volume doesn't look like a very strong level of support. We have a very strong level of overhead resistance right here, up at $34, somewhere in there. And very little support down here at 17. And that's why it's gonna be so much easier to push that down and for this to continue downward. And that would fit really well into my VTOP pattern that I've been following. So let's just say, like, even just to the low of this previous candle, or what is that, like $15? Like, that would make me a lot of money. And it's only $3 down, so a couple of red days and boom, there you could have it. And maybe then we see another bounce. But I don't see any bullish support yet. I'm gonna go ahead and zoom in a little bit, turn off this Ichimoku cloud, turn that off, apply, okay. And let's look at the 15-minute, back out a little bit. Yeah, isn't that interesting? I did, in one of my videos this last week, address this supposed wedge. And I say supposed wedge because it's not a wedge. Okay, if you were to call that a chart pattern, it would be a pennant because it wasn't long enough at the time. But as you can see, nothing has come of this. And I said I wouldn't analyze the price like this because you have to be looking for the right patterns. So let me open up Bulkowski's website again, and let's go to the VTOP. I think this pattern got people because everyone's caught up on flags and pennants and wedges, but that's not how all patterns work. Like, here's a pattern that doesn't have any consolidation in it at all, right? The price just moves. So he says, the trend line, after the reversal, price pierces an upsloping trend line drawn along the price lows, confirming the trend change. This is not a requirement, but an observation. Okay, that's one thing. Let's see here. Sometimes you get a mirrored effect. Where is this? He has a comment in here about the reversal often just follows a channel. I guess I just needed to find that first. That's okay. So here we go. Maybe it's down here. Whatever. Let's have a look at the pattern here. It's like, that's my source. I should have found that. I know it's there somewhere. Let's look at this, okay? So let's go from the very low, and we'll draw that uptrending line of support. So the lowest low is 1290, way back here. So the strictest trend line we can apply is that one, okay? The way I draw my trend lines is all per Bulkowski. You have to not cut through the price at all between lows and highs. And so here's the low at 1290, and there's the high at 34.33. And so when this trend line does not cut through any of the price, this is how shallow it is. And we can inform this line a little bit. Maybe that's the best trend line. This is technically an internal trend line, but bottoms tend to be below those sorts of trends. So this looks really good to me. And here we had this big downtrend, right? So if anything, I think if someone did want a chart that has a pennant, you would have wanted to maybe charted that. That probably was the only pennant in this pattern. Right there, and it occurred as the price came off the high and started to challenge that trend line up support, and it was broken, right? And there was a breakout. And something I like about pennants and wedges, if you draw them correctly, there should be a trend change or some big event at the very apex. I don't know why it is that way. It just is. Bulkowski's made the observation. He has a page on it on his website, which I should probably leave in a little better spot so it doesn't look so trashy. Let's see here. Pull that up, leave it over there. Okay. So yeah, let's talk about channels. Let's get a channel going. So there was definitely something brutal going on through here, right? Zooming in. Not much of a channel though, right? Not too many touches along the bottom, more of just a clean knockdown. But nonetheless, there was a trend through there and it did break and a new downtrend was established. And we did have this slowing of momentum right here. You see this. And it looks like there might even be a bottoming pattern right here, an inverted head and shoulders, right? But that pattern didn't confirm. You got to connect these armpits, and then the price needs to close above that level. And here it did not do that. Instead, it rejected and dumped. So that's curious because we're in a similar situation where the price has similarly left a channel, moved outside of it like this, and is now in a potential bottoming pattern, right? Like here's another, downtrend there. So keep that in mind. I'm going to move over to the right a little bit, and I'm going to draw another channel. And I think I want to start it. Let's try it from there. See, I want to connect those three peaks, and I can't quite do that here. So I'm just going to go from that peak. Bloop, and connect those. All right, so here we have, what I should do is I should color code these. Let me change the color here on this one. Okay. So here we had this downtrend, and then the price moved out of it, kind of like it did back here, and then kind of found a new channel, right? It's a little different on this one. Can I not make this? Wow, that's not very helpful. But we have a similar breakout with a bottom. There's even a little bottom in here. Do you see that? That's insane. Hold control to choose arrow direction. Okay, I'm holding control. Which way do I make my arrow? Up. Oh, I like that. What? Oh, it does it for one. I've never done that before. That's cool. I'm going to duplicate the arrow. So you have a double bottom right there, and you have a double bottom right there. This one's really small. Let me zoom in on it. It's just a very small base right there. You can see that, these pipes, but then boom, rejection of continuation, and the price rose, kind of this weird double bottom, and then boom, the price entered into another channel that was just above, right? Okay, just like it did back here, and then there's a potential bottoming pattern. Let me zoom in and let's see what we have here on the 15-minute chart. Right, this one doesn't look as bottomy. It looks a little more bullish, right? Same difference, I guess. We have something of a flagpole here, and a pennant, and then another consolidation there. It almost looks like a head and shoulder top, doesn't it? Maybe this will be a shoulder, this will be the head, this is the right shoulder. Interesting. Okay, I like to look at it like that, like a head and shoulder top, because the other pair of channels also ended in a head and shoulders, but this one was inverted. This looked more bullish, right? It's almost like flipped upside down, huh? So I guess we'll see if this one breaks out or up. Let's see, that would be our armpit right there. Yeah, so basically that bullish doji weekly candle relies a lot on the price bouncing from here, but the price only has to move like, I don't know, 10-20 cents to confirm a downward breakout on the first day of a small pattern, and that would very easily start a continuation. So you can see why Bulkowski says what he does about it's easier to push the price down, and those candles aren't as bullish as they seem. Interesting, isn't that interesting? So this uptrend is broken, and that's a big deal. That's a big deal. I'm going to zoom out to 4 hours, and I'm going to turn on a different set of drawings here. The trend line study. Oof. I got something here. Let's have a look. Right. So I made this uptrend a little bigger, a little wider, gave it some tolerance, right, to see if the price really did go down. And this is why I'm bearish. This is why I'm still bearish right now. Like, I really don't think it's bullish. Maybe I need to zoom in a little more. Let's go 15 minutes. So there's three steps to a breakout per Bulkowski. God, I gotta zoom in again and make it taller and taller. So first you have the actual move down below the trend. Then the price rises and it needs to test the breakout price, which was approximately between 1850 and 1875. 1870 was a big level. 1870 was huge. Right there, 1869, why not? This is a big level, 1869. This is going to be the first price that I think that overhead resistance is going to be found at. And if it can't find support there, I mean, yeah, that's bearish continuation. So that's possible too, to see that rise before a big dump. But I'm talking about the breakout here. So 1869, you can see the price came up, moved back up into the trend line of support, and then fell down and set a new low. And this breaks that uptrend right here. And that's on a very small 2-day test. But the price rose again, boom, here. Okay, so now that test has gone through twice and has been successful twice. A new low below 1693 is going to confirm a new downtrend. Because technically, and this is crazy, technically this downtrend that started from 34.33, this was technically a corrective phase down from a big run up. You can see how it fits within this uptrend. So there was a new low down here, which extended this downtrend. Okay. Let me just zoom in a little bit, and it stops right here. So the price is currently, depending on, there's a high, this uptrend support right here that crossed 2 days. This is the support, the first layer of support outside of the big uptrend support. And as you can see, it's already been broken. And there was even a little test and breakout of that one too, right? Breakout price occurred right here. And the price rose and tested that same price, okay? And that was near, you know, low 18s. Truly right there, boom, boom, boom. And then it went lower. And it didn't set a lower low from this point. So it's not technically confirmed here, but the price only has to drop to 1790 in order to confirm that breakout. So this downtrend appears to have been interrupted, yes, but by a very weak uptrend. And it's outside of this uptrend. It is possible that we'll get a bottoming pattern below the trend lines here. And we'll see a big pop up too. It's important to remember that. It's not likely, but if it does happen, there's a good shot at seeing a reversal here. Let's have a look. I know that it kind of has this head and shoulders semblance, but look at what your armpits would be. Your armpits would be really steep like this. Like, you know, this would be a shoulder here, this would be a shoulder here. It just does not look like that. If this was going to be part of a bottoming pattern, I want to say ugly double bottom, but 1290 is too far from 18. I think you have a 3% or 6% tolerance between the price differences and an ugly double bottom. So if this were to be a bottom of some sort, this kind of reminds me of this one back here. A little, no, not quite. Not quite. Interesting, isn't it? I guess the only thing I could do is identify horizontal resistance at 1870, 65-ish, right? And then try to connect some support. I mean, there's just not really anything there, right? More than anything else, it just looks like it's in a rectangle. Dipped below, came back up, bounced, hit it, bounced, bounce, bounce. And we call these rekt, R-E-K-T tangles in my Discord because it hurts so bad if you're holding options, out of the money options. As you can see, volume's been just falling off the face of the planet here, right? Look at that, coming to the very end. It's almost like we're at the very end of that downtrend. And now we're gonna see if there's continuation or not. Okay, so that's a big study, the Trendline Analysis study. Yeah, I mean, this could go much lower. I'm still waiting to reach this line again towards $7. It's gonna take a long time. Let me open up the measured move down chart. There you go. Now there is a ubiquitous place to see a doji. So in this measured move down fractal, there's an internal trend line that goes up, and once the price closes below this line, it's lights out. It's find new major low time, which would be a sub 1290 target, which for me is $7. And so to see a doji here is a little nerve-wracking because there could be a bounce at that trend line, but the price only has to go like $1. We only need $1 close next week down to confirm that trend line has broken, and then we're going to start the final phase of that measured move down. I'm going to pull up another drawing set here. The second measured move down I like to show on the 4-hour, I believe it is. Whoops. Okay, let's go ahead and zoom in on that one. So here's that internal trend line support that we're currently challenging, and you can see through here, right, there was a moment of sideways action. So just depending on the timing, there could be a doji through here. That makes sense, right? But the price breaks down and it just falls apart, and then it dropped all the way down to 1340 from the breakout price at like 28. So that was a huge decline. So this is what I'm waiting for, and I think I might have been early trading, you know, the last couple of weeks, but maybe the downtrend is actually going to start again. Like all of this, I think, just worked to erase all of this. Like this is even Steven. We're like at $18 even Steven, and if the price wants to drop 50% from 18, it can. You know, there's nothing overly bullish about the level of volume we're at. The RSI isn't doing too many things that make me think, hey, bullish reversal is imminent. So yeah, and you can see on the 4-hour here is even this nice turn down. This is what I'm looking at. Green, topping tail with a wick, right? And now the price is moving lower. Boom. All right, bounce, weak bounce, super weak bounce, no support there. Probably not much support. So I'm still bearish. Trading puts. I have open puts, so I'll be completing my daily chart and whatnot later. And how long is this? 30 minutes. Good God. Okay, well, that's what I have for this week. Happy trading.